Okay, so I'm gonna break down today's price action on Nasdaq. Price was pretty clean. It respected a lot of point of interest, and it reacted well. Probably all the times that it tapped into any point of interest. It's just about understanding where price wanted to go overall, what the bias was. So the thing with point of interest is, let's say it's bullish, right? Price is bullish. There could be a bearish point of interest, but it doesn't mean that you're supposed to hold that. That's what I'm trying to learn, okay? And I'll explain why that sort of messed me up here. You're supposed to catch those small reversals if you actually have proper knowledge, right, in the market. You shouldn't be doing it if you're learning point of interest in the beginning. If you're learning point of interest in the beginning, you should only be using point of interest solely for the purpose of continuations, right? But here I'll show multiple instances where I caught a short when I thought price was bullish, and I wanted to catch that short just to secure profits until it taps into a point of interest for continuation to the upside. But I got pretty greedy and I didn't follow my rules, and I'll show you what ended up happening. So I'm gonna break it down real quick. So price, this is before Asia open. Price was pulling to the downside, slowly building up liquidity, impulse move downside, building up liquidity, impulse move downside. Okay, now price had come down. Okay, create this low, this high, and then now we created this low. Okay, now also what you see here is we were building up trendline liquidity all before Asia. Okay, now price had come down, so you also see a lot of times basically prices like building up trendline liquidity, sweep, trendline liquidity, sweep, trendline liquidity, sweep. Trendline liquidity is the most important thing. Okay, so we had trendline liquidity, we came down, we sort of came down to this low. We failed to make a move to the upside. We broke structure to the downside, pulled up, swept this internal liquidity, and then we moved to the downside. Okay, now price is down here. What you see happens is we create this low, upside. Now we've created our final low. Okay, we push to the upside, we create a higher low. We have this liquidity here, liquidity there. Now what do you see there? So there was a point of interest, 100 tick. Okay, now I sat and I watched that. I did not take that, and that was a pain, but it's fine. So I watched it. So I was expecting price to come down, sweep liquidity during Asia, and then move to the upside. So that ended up happening. Price comes down, sweep liquidity, slowly creating a lower highs, lower lows, and then we create this low. We start to shift structure in the market. You can see that price ended up moving to the upside. Okay, now what do you see here? This is a bearish point of interest. Okay, I ended up taking this short on another account. I got break even. So this bearish point of interest right here. So this is what I was talking about before. My bias was bullish, but there was a bearish point of interest. You can take these for, it's basically like ping pong. Okay, so let's say you wanted to take this. You'd look for where price would pull back to the downside to continue to the upside. So that's not what I did, which is where I went wrong. I got greedy. I took that short. It was basically like a top tick, and I was like, yeah, like I'm the guy, whatever. Like I was confident, and I completely ignored my bullish bias, which ended up cooking me. Okay, so this is what happened. Price had come down. We had a great reaction. Now we started building up liquidity here. Okay, so we had all this internal liquidity, and what did we have, right? Internal liquidity. What did we have right here? 100 tick point of interest. What do? We sweep the internal liquidity, tap into our 100 tick point of interest, and that's when our move continues to the upside. So what ended up happening here was price had to come all the way up, and it basically break even me. Okay, so that could have been your long. Okay, now what also happened here was we had this liquidity, and also on the, so this hadn't been here. Okay, this is why it looks weird. So it was our point of interest. Price had closed here. We had made our move back down, and then price had come up, wicked our point of interest, and I had taken that. Once again, not following my bullish bias. Ended up another top tick, but ended up break even. As you can see, 51.75, 52. So break even. Now here's what happened here. Okay, so price started building up more trendline liquidity. Okay, so we have more trend line liquidity. Okay, so what ended up happening here was we were building up more trend line liquidity. Okay, now we also had this sort of internal high/liquidity, and price ended up pushing up, basically sweeping it. Now what you're supposed to look for here, okay, bias is bullish. Okay, we swept basically all liquidity, and we are now having a pullback. Okay, we're sweeping this trend line liquidity, slow pullback. You can tell by candle movement if it's going to respect our point of interest or not. Okay, you can tell we had we built up liquidity, we came down, wicked up, flipped back down, and we started to slow down here. Now what I had seen was on the 5-minute there was a point of interest here. Okay, but I was like, okay, if it's gonna respect this 5-minute, there's also a 3-minute over here, 3-minute, and I'm pretty sure there was a 2-minute as well. And I saw the 3-minute and the 2-minute overlap, so I was like, okay, I'm gonna take my entry at that. So I removed my 5-minute, had set my limit at the 3/2-minute, had a 5-point stop loss, and was able to catch 38-point move. And you can see these point of interest do work, these kind of continuations do work. You just have to understand where to use it and how to use it. Also, yeah, it's basically it. Yeah, that's basically my trades for today.